What's up, everybody? This is Dr. Nick with Leverage Media. Welcome to another special episode of the Path to a Million podcast. Don't forget, we've got a live Q&A on all this stuff: stimulus bill, Paycheck protection program, CARES Act. We'll have a live Q&A tomorrow at noon Central on the Dr. Nick page. So be sure to bring your questions there. Please watch the videos first just to make sure that they haven't already been answered. All right, so let's see. How will chiropractors qualify for the loan forgiveness? So the loan forgiveness is going to be those, I think it's 7 covered categories. So payroll, rent, utilities, health insurance premiums, interest on your commercial mortgage, and interest on your business loans. I feel like I'm missing one other one, but I've talked about them a lot. So just go watch those on like what the qualified categories are. So how the loan forgiveness will work is going to be based on what you spend the money on. So you get let's say you get a loan for $50,000. You've got to make sure that you spend the money on those covered categories, number one. Number two is you have to make sure that you keep people employed. So you have to have the same amount of people. I think it's based on full-time employees. You have to have the same amount of full-time employees that you had prior to all of this, so that you're not shedding people and then spending that payroll money on less people. It's supposed to be keep people employed. That's the whole point of this, is to keep people on your payroll. So if they've filed for unemployment, try to get them back. Try to make sure that you have a full roster of employees. Because if you have less employees than you did before this, it's going to affect the percentage that you get in terms of the loan forgiveness. So number one, spend the money on covered categories. Number two, make sure you've got the same amount of, you're keeping your employees, preferably 100%. And then number three, that you do not cut your payroll more than 25% total. So you can go down to 75% in terms of your payroll costs to use this money, like the theoretical $50,000. You can use that down to 75%, but anything below that, you're going to see your loan forgiveness percentage start to be cut. So don't do that. And yeah, that's basically it. Is like, they're going to give you a loan. If you follow these rules, they just won't. Let me talk about how you prove it. So with the proving, I think that you're just going to have to show that you actually spent this money on these things. So just make sure that there's a paper trail, whether it's a direct payment from your bank, like if you have auto debit already set up for your, for example, for rent, especially, because that's just a straight, you'll probably have to have a lease agreement showing that, it's $2,700 a month, and here's the $2,700 payment, and it went to the person that I have the lease agreement with. With the interest, it'll be a little bit different, because you'll probably have to get a report from the bank saying, okay, I paid $3,000 for my mortgage, $1,272 of it was interest, and $1,728 was principal. So you're going to need to have any documentation that you use that money for these specific things. I would even, actually, this is what I would do. If you're doing your business loans or your mortgages with the loan forgiveness money, I would ask the bank for this payment for 2 months of payments, because it's for 8 weeks. For 2 months of payments, give me the exact interest that's going to be. And they may not be able to give that to you until like the day of the loan, maybe. But ask for the interest amount and the principal amount. And I would stop the auto debit, and I would send them a check for the interest amount. And I would try to get them to give you some forbearance on the principal account. So they don't really care that much. They make their money on the interest, obviously. So if they're getting the interest payment, they know they're going to get their principal eventually. So most of them would probably work with you, especially if you have a relationship with them. So, but if they don't, just tell them, or just ask them, give me the interest amount, give me the principal amount, send them a check for the interest amount, send them a check for the principal amount. That will make it really clean, really easy to be able to prove when it comes time to do that. Because I think at the end of the 8 weeks, you're going to have to go apply for the loan forgiveness. So the loan is going to just deplete the loan. you're going to still owe the $50,000, but as long as you used everything on covered categories and you didn't cut your payroll and you didn't cut your employees, then you'll have to go and prove it. They'll say, yes, it's approved, check, and then they'll just erase it. It'll just be gone. If you didn't follow the rules, or maybe not the rules, but like if you lost some employees, lost some payroll, spent some money on some non-covered expenses, then they'll forgive whatever you qualified for the forgiveness for, and then they'll roll the rest of it into a 4% loan that is payable over 10 years, and the payments are deferred for at least 6 months. It can be up to 12 months that they'll defer the payments. So that is how, the way I understand it, the loan forgiveness will work.